My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to a special West Coast edition of Mad Money, coming to you from one market in San Francisco. Welcome to Cramerica. If you want to make friends, I'm just trying to help you make some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes I want to ask this ChatGPT, is this stock market ridiculous or what? Now, I know it'll tell me that it doesn't have anything current on the stock market, or it might want to agree with me because the ChatGPT I know is a bit of a yes man. But I'm seeing some action here that tells me people are selling where there's no need to sell. They're acting out of a level of fear that might not be warranted, given the lack of clear negatives, including a day like today where the Dow slipped 18 points, S&P declined 0.57%, but the Nasdaq tumbled 1.04%. What do I mean by irrational selling? Let me give you an incredible example. Today, the stock of a very good enterprise software company, Oracle, got smashed to smithereens, losing 13.5% of its value, or $46 billion, because of an earnings report we got last night that, frankly, wasn't all that bad. In fact, I'll hesitate to say it was actually pretty good, or at least part of the business that I care about, which is doing fabulously. So how does this financial miscarriage of justice occur? First, let's set things up. Oracle's a $300 billion company, at least at the time last I looked. It was up 50% coming into the print, or the publication of its earnings, as we call it. It's been strong because of the tandem of an amazing CEO, Safra Catz, and the brilliant chairman and founder, Larry Ellison, who has turned this decent, slow-growing company into a company that's embraced the cloud and artificial intelligence like few tech companies of its generation. Ellison, easily one of the smartest people in tech, by the claim of pretty nearly everyone you meet out here, is active at the company, more active than he's been in years. Why? Because he's so enthralled with Oracle's position in, yes, you guessed it, generative artificial intelligence. Buy! So you figure if the stock's going to lose $17 a single session, it must have been a nightmare, right? I mean, the quarter must have been horrible. Actually, it wasn't. It was far from perfect. That was actually better than that. Was it forecast terrific? Well, you know what? Let's pull it apart. Actually, for the parts of Oracle's business I passionately care about, it was pretty darn good. Like, it was artificial intelligence division was fantastic. They can't grow it fast enough as they'd like because they simply can't build new data centers fast enough. As CEO Katz said on the conference call, quote, our biggest challenge is building data centers as quickly as possible, end quote. Seems like a high-quality problem. She went on to say, quote, the level of demand we have is stunning. Stunning is the only word I can use, end quote. Now, based on these quotes, you might think Oracle's stock deserved to go higher. Maybe much higher. Wrong. The stock's collapse was so pronounced and the company's profile is so closely connected to all the things I came out here in San Francisco to check out, everything remotely related to the AI space, they all plummeted. I mean, everything. Microsoft, Adobe, Amazon, NVIDIA, Salesforce, the latter of which we'll have on the show later on at its 21st Dreamforce extravaganza, which is calling itself the world's largest artificial intelligence festival. How's this possible? Now, we know that Oracle crashed into this world of cloud infrastructure, gunning for Amazon Web Services, Microsoft Azure, Alphabet's Google Cloud business. Yeah, okay, they were late, but they came in. But if their stock got down, should all the others been washed out too? That's certainly what people did today. But I think that's just plain old fear talking. I prefer to take the other side of the trade. I want to buy a ton of Oracle stock, but I wasn't allowed to. We have a small position for the trust. After looking into the situation, I think the reportage on the story is ridiculous, totally detached from reality. Trust is restricted, mentioned to members of the investing club that we would be buyers if we were allowed to. Look, let me tell you what really went wrong here. Oracle spent $28 billion acquiring a digital healthcare information company. It's called Cerner, and it did it December of 2021. I didn't like the company. Unlike the cloud business, which is fantastic, unlike the artificial intelligence foray, which is extraordinary, Cerner did not report a good number. Okay, there were excuses made. Some of them were even good ones, including an accounting change that made earnings look weaker than they were. But the fact is, Oracle hadn't made that Cerner acquisition. I am confident this stock would have been flat or even up today. Did you hear that from anyone else? But it did. Did it buy Cerner and yet and it caused the problem? Did anyone else mention that except for me? No, instead, all I heard the whole day was the artificial intelligence cohorts being called into question, as well as the cloud infrastructure space because of Oracle. To put it another way, I came out here to San Francisco to see if the AI reality was living up to the hype, only to find out, at least today, that the hype didn't live up to the reality. So what do? Do you tear your hair out and lament the market stupidity? Do you wring your hands and say, I've had it with all these stocks? No, I think you'd be clinical. Oracle paid $28 billion for Cerner. For the sins of that transaction, it lost nearly $50 billion in market cap. Even if Cerner is somehow worth less than nothing, it's now baked in. I recommend buying the stock tomorrow. Buy it before it restarts its mammoth buyback. Buy it before I expect both insider buying from the CEO and perhaps even the chairman. Sometimes when the market gets your stock totally wrong, it's worth making a real statement, and you go in and you buy stock. Insider buying. What else could use a statement that shows you the reality of the situation? Let's talk Apple. Start again with the premise that you want to ask ChatGPT a question that it can answer. Something like, how is the stock of Apple done after the introduction of a new phone, as Apple did today with the launch of the iPhone 15, which will be available one day before my sister's birthday on September 22nd? The answer, stock's always done lousy. Almost always goes down on the news. Okay, with that tremendous bit of artificial insight, what happened today? Well, the stock went down. Now we're getting somewhere. Next, maybe ask ChatGPT how Apple stock is done when it's created new products that you didn't know you couldn't live without. I'm talking about a product like a revolutionary camera that reaches an entire moment rather than one thing. This is like the equivalent of having 7 professional cameras in your pocket. You'll be able to have many abilities to edit and readjust photos after they've already been taken. Goodbye wasted blurry photos. Or how about a move to a standardized charging cable? The iPhone will finally use USB-C rather than Lightning. So, same cable that you use to charge everything else. Believe me, that eliminates a huge source of frustration. Then there's the battery. Now it's going to last the whole day. How about a watch where it allows you to find your phone with the precision of 1 foot? I'd pay for that without even having to know what time it is. And a double tap gesture that we've never done that I think we'll all be doing within 2 years. Now, like the Oracle Maltese Falcon that was Cerner, the real story here that can't be told in 2 seconds that ChatGPT can tell something in. You actually have to think things through. Unfortunately, unlike Oracle, there are many, many moving parts to Apple, including we haven't heard anything late and nasty out of China. Plus, we have a consumer price index number comes out at 8:30 a.m. tomorrow. If it's hot, if you start hearing chatter about inflation going back to 4%, well above the Fed's target, then we're going to restart that guessing game of higher rates that had gloriously stopped after the Fed stripped the Jackson Hole. Too many moving parts with Apple. Perhaps your biggest takeaway is a simple one. Bottom line, if you want to take counsel of your fears and sell Oracle or Apple, I get it. But today, if you sold those 2 stocks, you took counsel of someone else's fears. Your money, their fears, seems wrong to me. Let's take some calls. Let's go to Tony in Florida. Tony.
Hey, Jim, I just want to give you a big booyah from a very happy club member. And,
fantastic.
I have a little pickle here. I bought this stock because it was splitting up, and I thought it was going to do good, but there's no momentum. It keeps on going down, down, and down. I don't know if I should just take the loss and buy something better. It's Kellogg's. I'm a Tony Tiger fan. I was hoping that they would do a lot better than they're doing now.
Well, Tony, look, let's not prejudge, because it's just this plan's just being put into action. It's got a 4% yield. I think that the company presented that plan on our show, and I think there's a lot to recommend. It's not a red hot stock, but it's going to the 2 pieces are worth a lot more than the stock is selling for. I'm going to urge you to hold it, and thank you for being a member of the club. Let's go to Chris in West Virginia. Chris.
Hey, Jim, booyah from wild, wonderful West Virginia.
It's beautiful there. I agree. Yeah. Mountaineers, yeah. What's up?
Well, I have a quick question for you. So I have a position in a company that used to be involved in, well, I hate to say it, but the death industry. Okay. They've actually converted to more of an industrial play. They're down about $10 from their 52-week high. They just made a pretty significant acquisition. I'm trying to figure out if I should buy more at this level. The company is Hillenbrand, ticker symbol.
Yeah, you know, let me just tell you how I feel about this one. I think these changes were so swift and so, frankly, people didn't see it coming, that I got to do more work on it, because I saw this and what are they doing? What is their plan? I, too, am confused. We get together, we'll work on it, and I'll have an answer for you next week. Absolutely. Like, sometimes when the stock deal gets taken down, you got to really dig a little deeper than what the headlines are saying. You got to be also a little bit clinical, too. Never pays to sell based on somebody else's fears. That's what I saw today on Mad Money Tonight. Lyft announced a new initiative that will match women and non-binary riders with drivers of the same or similar background. I'm learning more about how this is shaking up the ride-sharing space with the company's CEO. Then, when we came to San Francisco, you'd think tech. What about utilities? I'm talking to the turnaround artist behind PG&E to see what the future could hold. And every year we head out to Salesforce's annual Dreamforce conference. I'm sitting down with Mark Benioff himself from the center of the action. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.